Good morning! Hey, little boo-boo! Comment allez-vous? So love my good friend. Hey, good morning, everybody. It is Wednesday. Canadian Dollar Day, huh? Durable Goods Day. Wednesday, the 27th of September, 2017. This is your daily Forex trading strategy session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however. No, you know what? Let's do the old school disclaimer. You ready? This goes back 13 years. Welcome to, wow, it's a cold start here. Let me remind you that the purpose of this webinar is education. This is not an alert service. I'm not here to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky business, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Oh, yeah. So anyways, that goes back like a bajillion years. Yeah, that is the one. So anyways, good morning, everybody. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We are a boutique foreign exchange broker, and we want to become your prime brokerage firm for your successful Forex trading business. So I've been charged with the duties of helping you become a success sooner than later. Right? I'll earn your loyalty and respect, and then when you're ready to trade real money, you'll choose TradersWay as your broker. Makes sense to me, right? No glasses. I don't always trade with glasses. When you see me with glasses, so you got to remember, I'm a college student, so I study a lot, I read a lot. I was up at 5 o'clock in the morning reading today. I was reading last night. I was reading yesterday afternoon, whatever. So I do a lot of reading. And then one of my cohort guys was complaining because he's taking a different class. So we each take two classes. Sometimes we all take the same class, and sometimes we all take different classes. Well, anyways, he's complaining about a class I took maybe a year ago. And he's like, it's like 1,200 pages of reading this week. And I'm like, yeah, that's a great class. Love it. So yeah, if I'm wearing glasses, it's because I've been reading. So I've read so much that my eyes were sore. You ever get that? Like you got bug eyes like a muppet. So I have been trading, I just don't necessarily wear glasses. Yeah. So I do these sessions 7:30 a.m. New York time. That gives us a couple of hours before the New York Open. Right? A couple of hours before the New York Open. It's also London lunch. You guys ever want to trade the New York Open with me sometime? Maybe for a week or a month or something. Instead of 7:30 in the morning, we do 9:30 in the morning, or let's say 9 o'clock. And we start right before the stock market opens. The problem is TradeTheNews.com doesn't do the 4.5 480, 4.5 480, 4.5 480 thing anymore. But Brooke likes the London Open. Yeah, yeah, yeah. The New York Open breakout strategy. Hey, is there actually a New York Open breakout strategy? I'm naive on such things. There probably is. How about this strategy? Why don't you just buy at support? No, I know. Oh yeah, yeah, Peter. There are different times of the day for that. Sure. Yeah, for all kinds of things. All right, you ready to do some technical analysis? Now I'm going off my brain, but I think we have durable goods at 8:30. And I don't really like durable goods, but it's going to be a surprise to the upside, just so you know. It's going to be surprisingly good, and everyone's going to freak out. But at the end of the day, it won't make a difference. And then I think we got some sort of housing stuff at 10. Is that right? I mean, we could look it up on Forex.Today, but you probably already know. So anyways, I don't think we have market movers on those news events, although you might get a quick scalp out of them, but that's a volatility thing. Am I right on those, or do I have to look it up? I got it? All right, cool. Is it existing homes or new homes? I think it's existing homes, right? Which represents something like, what is it, 85% of the market is existing? Oh, pending home sales. Cares. Yeah. The thing about the pending home sales is I think if it includes time from the hurricanes, right, the Texas hurricanes and the Florida hurricanes, then any deal that was pending to close may not have closed. So imagine this. You put $200,000 down on $1 million home, and there's 30 days that you wait before it closes and you take possession. And during that 30-day period, the roof is ripped off, then the windows are blown out, and all the landscaping's in the neighbor's yard. And there might be some flooding, not sure. Well, the deal's not going to close. Right? Because now you have to have it inspected, rebuilt, at least priced out for the rebuild, maybe a renegotiation in the price. Whose insurance is going to cover it? The seller, the buyer? Well, the seller's got to cover it, but then the seller needs to get it done so that the new buyer buys it, and then they can transfer the ownership and transfer the liability and blah, 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 blah. But the deal ain't going to close, yo. So is it Texas and Florida combined 25% of the market? I'm just going off of this stuff in here, not the gray hair, the stuff behind it. I think that's about right, isn't it? Is it 20? So anyways, roughly speaking, right? So anyways, so if those hurricanes double whammy Texas and Florida, now it wasn't all of Florida, it wasn't all of Texas, so let's just say there'll be a minor blip. It shouldn't be good data. It shouldn't be bad, but I don't think it'll be good data. And durable goods is going to be surprisingly good, but it doesn't matter. Anyways, does anyone know why I think it'll be surprisingly good? Oops, let me get this out of the way. Because the dollar must go up. So John's saying it's the currencies leading the hurricanes. Previous was bad, yeah. So it has to be better than last month to get it to be bad again. But yeah, it has to be better, relatively better, which is difficult to do, right? The problem is durable goods has a very volatile trending, you know, where it's a hokey pokey number. Now the general trend may be improving, but let's say the standard deviation from the mean has fat tails. I don't know, something like that. Okay, so anyways, we'll move on.com. So that's that. Pound dollar. You are not alone. Okay, what did we discuss yesterday? Let's just go through it again. I asked you, yesterday was a learning day, and now it's a day to go back and validate and verify the topic, right? Because yesterday I said, like when we're in here, I said, pay attention to what happens. We're in a cluster of weekly target, monthly target. What happens? Should you keep trading? Should you ignore these levels? Or should you write down on a piece of paper the lessons that you've learned that you can repeat in the future? I said something about tattoos and all kinds of weird things. I don't think the analogy worked, right? But what do you think of that? Like, there's a monthly zone and a weekly zone combined. Did it have an impact on the market? Yeah. Remember those days when you decided a lower low wasn't good enough to sell because you needed confirmation? So another lower low was even better, but you still needed more confirmation. A lower low was even more better, but you still needed more levels of confirmation. So another lower low is even better confirmation. So now you're going to start selling, because everybody knows, wait for it to make 5 lower lows and then sell, right? Has anybody been there? As soon as you start selling, son of a... Because you have to have at least 95 levels of confirmation before you sell, right? Son of a brick! Those were the days. No. Son of a brick is a brick. So anyways, I don't know. We've all been there at some point. And if you haven't, then you're a liar. Okay. So we're down here now. And there's this saying, know when to hold them, know when to fold them, know when to walk away, know when to run. And I think that was Gandhi. Mahatma Gandhi. I think so. Okay, I think it might have been Mahatma Gandhi. But anyways, there's a classic example of just knowing when it's done. And so many years ago now, and honestly, it's so funny. I still remember. It's amazing. To me, it seemed not long ago, but I think it was 10 years ago. I sat in my backyard. I think it was a Friday. Okay. Smoking a cigar, I'm sure. In my backyard with a laptop, and I was writing a magazine article. And it had to do with the difference between a good trader and a professional trader. A good trader is mechanical, okay? Like, if you know basic price action, okay? Breakout, pull back, breakout, pull back, breakout. And I actually, thinking about it now, I think actually I set this up. I think we were talking about it here. The lower low probably would happen, lower high would probably happen. I mean, honestly, now that I'm thinking about it, if it wasn't this one, it was something very similar. But I think I even drew this line here. But I think I did actually, right? Like I said here to let it break and then sell it on the retracement here. But I said it like, yeah. This was Tuesday's trade plan, right? You sold that. Yeah, so it was. So, okay, the difference between a good trader and a professional trader, a good trader will know the patterns and just simply rinse and repeat, right? Lower low, lower high, lower low, lower high. A moniker that I developed many years ago to reinforce this was this mantra: down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 down. Okay. Now that a good trader could do that. And it's harder than you think, but it's not as hard as you would think. But when do you stop doing it? So here's a cluster. This is a daily, in a weekly, maybe there's a monthly in here, but this is a good place to stop. Okay. So your big thing now is if you do take another shot, it would be in here. And I think what you would look for, or at least be worried about, is something like this. It doesn't have to go this way. I mean, look, you know, pig still has its problems. Dollar might stay strong. There's lots of interesting things going on at the central bank level. And some geopolitical risk and all that kind of stuff makes the dollar seem like it should be strong. Okay? Fine. But you should still know that this is an area to be worried. Okay? And maybe that's ignorance is bliss, because this might be one of these situations where an amateur just sells and just sells and just sells and just keeps going. Not an amateur, a good trader, right? So better than an amateur. A good trader would just keep doing it and like, I don't see any support, I'll just do this forever. Okay? But I think a great trader, you know, sells, 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 takes profit, walks away. Okay. And I think another thing that I think a professional trader would do is ignore this market. And I think we talked about this Friday of last week. Wait for the breakout relative to the previous lows. Just sits around and doesn't do anything. What'd you do for the last 4 or 5 days? Nothing. Pound dollars in a range. I'm waiting for a breakout. Cool. What does an amateur do in a market like this? This is bloodbath time. This is bloodbath time for amateurs. This is where you lose your big money. This is where your drawdowns happen, when the market isn't doing anything. You ever notice that? It's the consolidation time where, right? You keep buying and then you lose, and then you sell and then you lose, and then you buy and then you lose, and all of a sudden, death, right? Because now you're guessing and you're doing a bunch of inconsistent things. So anyways, you could wait for the breakout. In this case, it's a downside breakout, so you know this is actually where you sell. This downside breakout just says, all right, I'm going to look for the roll reversal and sell there. And so we did talk about that Monday, was it? Offering a Tuesday sell. What indicator are you talking about? Pivot points? Yeah, these are pivot points. So I have, these are weekly pivots, and these are daily pivots. It's a unique setup. Usually I don't have weekly daily. I have weekly monthly. But shh. Okay, so these are two different pivot point plotters. So let's see. Yeah, so here's pivot points and here's pivot points. So I have two different sets of pivot points. Yeah, so it must be quadruple witching Friday this Friday, right? Or was that last week? Actually, that would have been last week. Well, Ryan, I believe I said on Monday that there were 15 FOMC member speeches this week. If you were an FOMC member, you were probably speaking this week. What do you think they're doing? Yeah, what do you think they're doing? Actually setting us up for December. October's already done. They already said that they're going to do it. Yeah. It's all about December. Bullets in the chamber, right? Can you believe that there was a time, if you go back to like Paul Volcker, who was right before Greenspan, Paul Volcker's Fed had no press conferences, no releases. Get this, if they raised interest rates, they didn't even tell you. They didn't even tell you. The market would go, did interest rates go up? Is that the Fed? And you'd have to figure it out. And then Paul Volcker would testify, because twice a year the Fed has to testify, right, to the Senate and to Congress. And they're like, yeah, we might have raised interest rates, maybe. Yeah, we could have, but we might not have. Can you imagine those days? It's not that long ago if you're my age. I remember forever because Paul Volcker became chairman of the Board of Governors at the Federal Reserve Bank of the United States on my 50th birthday. And I'll just say, wow, this is a historic day. So I'll never forget it. Yeah. John's like, Wayne, you're not 98 years old. Well, you don't look a day over 62. Yeah. Well, that's all my years dancing. Those are hard years on my body. All right. So what am I supposed to tell you in here? I gave long speeches about this is the projected area. You could have gotten out on the 15th. And this one's the 20th, sorry. What should I tell you here? Maybe it doesn't matter. What if you took your profit here and you're now in Peru, hiking Machu Picchu, and somebody said, hey man, did you see the USD yen? It went up 38 pips. You're like, damn, I gotta get on a plane. I gotta get home. Right? Does it really matter? I suppose it does. But the thing is, on the long run, you should be prudent, right? So we expect the month of September has a higher plausibility of breaking above the monthly pivots, but it doesn't have to. If it was October, I would be not so confident. If it was August, I'd say not likely. Okay, so here it is, it's happening. Should I make a big stink of it? You know, I don't know. The one thing is, we do believe it will be up, right? How many people would confirm that? That like in the month of October, I would hope to see this rise. Right. You haven't heard me say the opposite, right? Like I think this is going down in a blaze of glory. No, you know my planning. My planning, right, is up. Now there might be a retracement, but up. And so one of the things I think I did say in the last couple of days, or last couple of weeks, in fact, this week and last week, one of the things I believe I said is you could prepare for next month's rally. But it's not going to be on this month's pivots, so that you could look at the high-low and estimate a close, or just do open high-low. Well, no, that wouldn't be right because the close is going to be higher than the open. So I guess you'd have to do, let's say, high-low, estimated close being higher than the open. So you have to adjust for that. And assume next month's central. And you could, I'm sure you can find a pivot point calculator, put in the high, put in the low, put in the estimated close, and actually bust out full pivots, and try to play October's pivots last week and this week. Did I say something like that? I don't know. I don't know. I think I said something, maybe not that clear, but I did say something, I think. But remember, if you don't remember it, then it didn't happen. Even if it did happen, if you don't remember it, then it doesn't exist. Doesn't Jay-Z say something about that? He who don't feel me is invisible to me, vamoose, son of a bitch, something like that. I don't know. Too deep. Quickly talk about it. Yeah, I just threw it out there. But what that means is that in here, stop buying up here, right? And then, right? That's what I meant. But is it here? Is it here? Is it there? What's another way of catching it if you're a bull? If you're a bull, okay, and you took profit here because you're conservative and disciplined, what could you do this week if you're a bull? I wouldn't fib into the resistance. Well, you have to be more specific than buy at support, because those are too abstract. Fib it. Fib what? Buy it at support. What support? I'm more interested in why. Yeah, okay, a weekly swing based on swing trading course, right? So if you've taken the swing trading course, guess what? This is the buy. Yeah. I mean, that's it. That's it out of the course. That's the exact price to the pip. And your target is here. Now you're worried about it because you're so close to the monthly target, but that is the weekly swing plan. Oh yeah, there it is. Who did that? Robert Scott. He who does not feel me is not real to me, therefore he does not exist. So poof, vamoose, son of a bitch. Yeah, you got it. Robert, did you Google that or did you know it? Yeah, all right, good. Bravo. Love Jay-Z. So just give me one more platinum plaque, fuck rap, you can have it back. That's great. These are all very good. You know, I could squeeze a Forex term in there, right? Yeah, I could squeeze Forex terms in there, right? Does Dr. Dre really have snowmobiles? At least he could provide his family with groceries. Yeah. All right. All right. Oh, let's look at a failed trade plan. Love failed trade plans. Here's gold. Broke out, retraced. We looked at a potential roll reversal. Thought maybe you'd take it off a pivot cluster and rise. No, didn't. Pippin ain't easy. If you have trade problems, Phil, sorry for you, son. I got 99 problems, but a pip ain't one. That's my favorite. I love it. So anyways, that one failed. Yo, whoa. Fundamentals took over. Hit me. Okay. So that one failed, but these things can happen, right? It's not magic. That's a failed trade plan. And I like it. That's the interesting thing, right? I like it. You can see it never made the higher high, so it's aggressive. But it is a double bottom, higher high, higher low, roll reversal, pivot point, 618, and it failed. But that's a good one. That's sort of take pride in your losses type thing. You shouldn't be ashamed of it. Why didn't it work out? Well, put it in reverse. Should a bear be proud of selling this at the 90% level or the 85 point something? All right. So whoever sold it as a bear shouldn't be that happy, shouldn't be that proud at all. They might say, hey, Wayne, look at me. I'm a better trader. I sold it and I made money. That doesn't make you a better trader. Because don't worry about it. You'll lose money later. So, you know, buying at a 618 Fibonacci, double, meaning weekly and monthly central pivot in a roll reversal after a double bottom, I would do that all day, every day. And I think it would be rare that I would lose money. Okay? You understand? That's a great loss, in my humble opinion. Now, the caveat here is you're a bull on gold. Okay? If you're a bear, you probably wouldn't have sold, and you certainly wouldn't have bought. See the difference? Some people just look at it, and they're looking for buys or sells, and you've already lost. You should just empty your trading account and donate it to a charity. The McDonell Foundation and Trust Cigar Fund. All right, USD kitty cat. What do you think? Clear as mud, right? Do you see clear respects of pivot points? I've seen better. Oh, look, I already put you long last week. I've forgotten about that. You want to try to relive that plan? It's not bad. See, I've highlighted the roll reversal here. You see? And I'm guessing here, which tells me we were up here. So I'm trying to guess what we talked about, but we hit the pivot profit zone on a Tuesday, which tells me that's one of the counter trend trades from the trading program, from the swing trading program. Now it's supposed to be here if you're doing the counter trend, so that didn't work. But what I outlined here was a retracement back to the roll reversal in which you would long. Now it took a while. It took all the way here. And then there was some news, whatever it was, okay, and then finally it's taken off. You can see this might have even been the target. Can't really even tell anymore. But we're riding the 21 up quite nicely now, aren't we? Okay. It's not the cleanest trade like old school Wayne, you know, 2155 cross, which means you buy this 5.8, you take profit, you buy this 5.8, you take profit, and you buy this 5.8. That's old school Wayne. No, I still kind of do that, but this time of year, what I'd rather do is buy this one, buy this one, buy this one, and stay long until the 2155 crosses down, which could be a long time on this 4-hour chart. Cool? Right? Guess we'll look at Aussie yen. Okay. What do you see here? Weekly S1. What else do you see? '21 EMA on a daily chart, which is held for 3 days, or at least since Monday. 2.5 days. 2 days. Today is going to be the day, right? How does that look as an entry? So maybe it sticks, right? That's where my stop was. That's where my entry is. See? See? Cool, right? So maybe I have a chance. Right? Yeah, I have a chance, don't I? So I've made as much as 50 pips on it, but right. Wayne, I base similar entry, great, on daily 21, little, yeah. Would the weekly S1 be a good factor to consider buying it? Yeah, no. Well, the primary reason that I bought it was the daily 21. So if you read my book, I say things like the 21 EMA is a dynamic level of support and resistance. If you are bullish and aggressive and prices above 21, you buy dips back to the 21, and you are 100% certain it will make a higher high. Something to that effect. Okay. Yeah. So if price is above the 21, you should be bullish and aggressive. And you buy dips at the 21 because it is a dynamic level of support. So this just is an example of I bought it at the 21. Right? Now, when did I think the book came out, what, 2007? Which is actually interesting because it just occurred to me that would be about 10 years ago. We should have like a 10-year anniversary party somewhere. But it's coming up to 10 years ago, which means I wrote this like 11 years ago, which means like 12 or 13 or 14 years ago, I was trading this way, and I'm still trading this way. I use exponential, but if you go daily and above, Johnny boy, I would recommend dropping into SMAs because of the equity traders. They're just not that smart. They've been doing things the same way since you had to hand draw your moving averages. So this is the way that your dad traded, and it was too difficult to calculate it in EMA. So you're just like, well, over the last 5 days, what's the average price? That would be a 5 SMA. So if you're doing like dailies and stuff, that's what I do. But you can see I bought at the EMA, and you know, I did it yesterday, and now I'm up 50 pips. But my point is, isn't that what I did like 14 years ago? Maybe 15, maybe 16 years ago? I said, gee whiz, I seem to do well buying at the 21. The only trick I find is the management of the stop. That takes some work, right? But like, let's drop this into an SMA. Yeah, it's about the same. Yeah. But it's not as sensitive, right? So like you look at that and you're like, wow, this might be acting as support, but boy, is it lagging. So how do you get it to lag less? Oh, hey, maybe the EMA works better than the SMA, but that's what I said. And you have to remember the old days. I mean, the old days, the days even before boot camp when I was teaching myself, I tried everything. I tried everything, guys. Like, I tried everything. And for a very long time, I used the 2060, I think it was. The 2060 EMAs worked really well for me. So now I'm thinking about when I was trading in California. So it was after I quit my job as a VC. I remember reading about Fibonacci somewhere or teaching myself Fibonacci. Oh my God, can you imagine? Just figuring out Fibonacci on your own, like no book, or I obviously wasn't reading about it, so I don't know. So anyways, Fibonacci's on my mind. And I remember, so even back then, I meditated every morning. And so I do remember meditating about this. And I meditate in the shower. I don't know if you know that. I don't know if you need to know that. But anyways, I'm naked, thinking about Fibonacci. Oh, Leo. And it occurs to me, I'm like, I think I was actually teaching myself things like the Fibonacci sequence. 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89. What? Hey, wait. 20 and 60. But 21 and 55 are fib numbers. I remember sitting naked thinking about this. This is how I meditate, by the way. You don't do this in the yoga studio with all the, yoga pants mummies. I think I'll lose a quarter pound next week. Oh, that's a very good idea. Here's my Pilates instructor. So when I meditate, this is the type of thing I think about, right? And I'm like, 2155. That's really close to my 2060. I wonder if that's why the 2060 EMA combination works really well for me. So I get up, I turn the shower off, I get up, I dry off, I put the towel around my waist, I go into my office, right, and I open up my trading platform's already up, right? So I go into my trading platform and I do this. So I'll do it in reverse. I went from 20 to 21, so now I'm doing the opposite, right? And this would have been 60, not 55. And what do you think? Is that dramatically different? No. So I'm like, you know what? I'll just make them fib numbers. I don't know if that's why they work. I don't know if it's hocus pocus. I don't know if it's confirmation bias. I don't know anything, but it doesn't matter to me. So it doesn't hurt to think that maybe they work because they're Fibonacci levels. Or if it's pure confirmation bias, but if it's pure confirmation bias, it still works for me because it helps me believe in them even more. Oh, they work because they're Fibonacci. Okay, great. Who cares? So since that moment in time, they've been 2155. You know what I mean? Yeah, well, John, John brings up a point. I think somebody or anybody, right, can take a tool and make a strategy out of it. Yeah. No, so it's the discipline part, the patience and the discipline that people lack. And I've always said that. Look, don't use what I use. Do something else. If you want to use Elliott Wave in conjunction with CCI, I'm sure you can become successful. So it's patience and discipline. All right, and like these are not magic numbers. I'm trying to like put humanity into the methodology here. I'm trying to tell you that it was just some kid trying to figure it out on his own, right? Literally in the middle of the night in California, and one day, butt naked, came up with an idea to change it to 2155. That's how it came about. It wasn't, an alien spaceship coming down on Earth and providing the third tablet that Moses left up on the mountain. Hey, Moses, you're so forgetful, right? Oh, the third tablet, Fibonacci, right? Yeah, the one that Illuminati used, right? Yeah. So, no, it was a human being that played around with some things and found some things that worked. Once again, Dr. Jones, what was briefly yours is now mine, right? It was just that. It was a human being figuring things out. Are these the magic numbers? No, it's the patience and the discipline. That's why I keep pushing you in those areas. Like I said, 3 weeks ago, one thing you could do is just focus on the double bottom, higher, high, double top, lower, low scenario, set up the 1, 2, 3 roll reversal at a fib level, and just do that 100 times. Because I know it'll work, because that is a reversal pattern, a pullback after a reversal pattern, those are high probability. But the thing that really matters is the fact that you have the patience and discipline to do that one thing 100 times. If you can do that, then I don't care what your methodology is. Your patience and you have patience and discipline to look for high probability setups. Guess what? You will improve as a trader. Not because of the pattern, but because of the patience and discipline. And then you can go out and learn Elliott Wave. I don't use Elliott Wave. Right? This is the durable good stuff? Great. So was it better than expected? Oh, no. Even worse? Whatever. Not worse than last time, though. Revision. All right, good. Doesn't matter, so. See, what happened recently is, in the absence of the Fed speaking in August, the world convinced itself that maybe things are not as good as what they are, and that the Fed might not raise interest rates at all in 2018 or 2017. The sky is falling, the sky is falling, the sky is falling. It turns out, you know what? Global macroeconomics is actually pretty good. And that the Fed is probably now going to raise interest rates in December. Now we're doing the opposite again. It's like, oh my God, is this how the world works? Yeah. Talk about a bunch of sheep. Huh? Gold, seasonality in gold, yeah, probably demand for Christmas products or something, or people moving out of investments and into gold going into year end, or who knows. It might have something to do with Middle Eastern holidays. It might have something to do with India. I'm talking to a guy now, and he says he has 240 tons of gold. $7 billion in gold. Yeah. I'm like, you should probably monetize that. And he's like, yeah, that sounds really good. Your carrying cost must be huge. It is. Is that funny? Tucker's like, yeah. I'll put it in the coffee can in my garage, right? Yeah. Is that funny? No, he literally has it sitting in a bank. It's SKR'd at a major bank. So anyway, so you might want to put it to use. Yeah. Is that funny? Yeah, you think Shug, but then he can prove it. So you're like, really? But like any big money, it's complicated. And that's, more money, more problems. So anyways, there's that going there. Pig we did. Oh, we got to do oil. So in here is where I heard something about it's Turkey ganging up with Syria and Iran against the Kurds and Iraq against the Kurds. Like, when was the last time Iraq and Turkey, Syria and Iran ever worked together? Like, ever. right? Going back to the time of Abraham. Like never. Oh, since the Persian times? I guess that's a good answer. Yeah, I guess, yeah. But anyways. But that's not working together. That's being conquered. Okay, that's different, right? No, it wouldn't have been Turkey at that time. I'm talking about 2,000 years before the Ottoman Empire, right? I mean, yeah. So anyways, so the news says, oh, look, it's something to do with the Kurdish oil being taken off the market. How much oil do the Kurds provide? They don't even have a seaport. What are they going to take it through Syria? Oh, wait, there's a civil war. Like, how much oil is really coming from the Kurdish area and entering the global market? I mean, I don't know. I guess I could look it up. I can't imagine it's enough to move the entire oil market up, right? But that's what was reported somewhere I read. And I don't read the paper, so on TV. Oh, I listened to Bloomberg. That's right. I heard it on the Bloomberg radio. I'm like, really? It's the Kurds? Yeah. Could be. Yeah, they're so right. And then there was some other great reason why it stopped going up. This morning they talked about it, and it's so retarded that I don't even remember what it was because it's so stupid, right? They're like, oh, we've got some serious reasonings here, serious reasons why it didn't go up. Besides hitting the monthly target we established 3.5 weeks ago. Yeah. So anyways, it stopped going up because the Russians, because the Russians, I guess, are going to do something and stop going up. So that's great. That's really good, right? But again, to put it in context, you have to go all the way back to this day here. Oops, let me clear that out. Okay, on this day here, okay, everything this here doesn't exist anymore. It's dead to us. Based on the previous range, targets were created for oil. The bearish target was down in here. The bullish target is up in here for the entire month. Cool. So, was I a bull or a bear on oil in mid to late July? Oh, sorry, I'm way off. I'm off a month, aren't I? The first is in here. Wow, okay. I'm off a whole month. All right. So anyways. All right, so let's do that. So going to the month of August then. At the end of August, did I declare myself a bull or a bear on oil? Okay. Check this out. If you take this across, okay, that's the monthly M2. But if you notice, we opened at the central. So when I declared myself a bull, one of the things you could have done, like I talked about on the USD yen, is calculate the new monthly pivots several days early. Okay. But let's say you just play it as it is. Okay. The first day of the month is here. Could you buy it at the monthly central if you were a bull? After a double bottom, higher high. See, I already have it marked out. See, higher high off the double bottom, retracement into the roll reversal. Oh, okay. But let's say you didn't take that. Then clear this out. Then the new pivots came out here. And at the exact minute of the new month, we're at the monthly central. You could, that's an aggressive buy because you don't know if it's going to drop like a ton of bricks or not after the double bottom with a higher high, with a higher low at roll reversal. But you still don't know. Okay. But it does take off like a rocket ship, making a new high. So where is the new support? Okay, here's the M2. We've already taken off, so the next level up is the CPP, the MCPP. Okay, so if that's your bottom now, the target is supposed to be, and you knew this day, R2. MR2. Okay? Right? How many people can confirm that that's straight out of the swing trading course? Yeah, I know it is because way back here, we said 52.50. Is the projected high for oil. I don't remember talking about a low for oil because I'm a bull. So maybe it's the Kurds, maybe it's the Russians, maybe it's OPEC. But we hit 52.50 and stopped. And it all began with this declaration of, I think the new range is 45 to 55. I'm a bull. So now that we're at like 46, I'm getting ready emotionally to buy because I made the decision down in here or maybe even in here. Right? Is it rigged? I think it's called careful planning based on fundamental and technical analysis. So it looks like all magical and voodoo and stuff, but we did all of this together. And I took the time to explain why I think we're moving toward a 45, 55 barrel world based on global macroeconomics. And therefore, I'm looking for support now that we're closer to 45, believing it's going to go to 55. And I used all kinds of things like peak oil, for example, being in June. Well, by the end of the year, we knew it was going to go up, right? How do I know it's going to go up? Let me ask you something. If June 1st is the highest level of oil inventory in the entire year, that's my assumption. You know I've taught you this. I've been teaching people this for 10 years. Right? Kurt Worley did 50 years of data gathering so we can interpret when peak oil based on the 50-year average would be, and that's June 1st. Okay? So historically, do we have more oil in December than peak oil or less oil in December than peak oil? It's true, John, but just stay with the logic. Like every year, John, it's different, right? Every year it's different, yet it's very much the same. So I'm not disagreeing with you, but yes, oil supplies historically hit peak. This is supply now. peak in peak in June. So by December 31st or January, let's say, 6 months later, we should have less oil, right? Okay, let's have some fun. Bring out the drums. Hang on now. Let's do an experiment here. Okay. Help me label. Okay. What curve is that? Label this properly. Is that a demand curve or a supply curve? Don't say supply demand. Well said, Robert. Hey, 50% of the time you're right, 50% of the time you're wrong. Well, let's think about this. If this is price and this is quantity, okay? If price is low, like $1, or price is high, like $10, how does that affect things? Well, if price is $1, then the equilibrium would be way over here, which means you're buying a whole bunch. Quantity is high, right? If price is high, like $10, the equilibrium point is here, which means your quantity is low. So this would be demand. Therefore, this would be supply. Okay, at this price, P1, this much is demanded, Q1. So this is the oil market. So are we saying, so this is, let's say this is oil on June 1st, oil market 6/1. Okay, great. So by December 1, so we'll do a different color now. Let's do red. So on December 1, let's do this over here. Will supplies be higher or lower? Lower. So we have a new curve here. Supply will be less. So we'll call this S2, the new equilibrium point, the quantity of oil, okay, and the new price, P2. So therefore, in this world, price goes up. Well, damn, didn't that, wait, that, I think that's what I said, right? I think I said it would go up. And then we'd be in a 45.50, because if we're past peak oil and we bottomed out, 45 would be the lowest it could possibly be until the end of the year. So therefore, oil prices are more likely to go up. You see what I mean? Isn't that cool? That's called fundamental analysis. Listening to the news and having somebody tell you it's the Kurds are driving up oil prices. The Kurds. Not 50 years of data telling you when seasonalistically supplies are highest, and based on just a normal idea of drawing down from the peak to a normal natural valley based on demand increasing, in fact. See, that's the other thing, right? Demand for heating oil goes up, right? So now it's November and it's cold in Boston and New York, okay? Harvard is covered in 5 feet of snow and it's cold. Demand for heating oil goes up, D2, new equilibrium point, demand goes up, so now you got like Q3, I guess it is, right? Demand goes up, and now you're at P3, and P3 is higher than, so that's P2. P3 is higher than P2, and P1 was equilibrium price. So it goes up even higher. Supplies are dwindling, and demand has gone up. 55. It's amazing, right? Anybody have an aha moment? Like maybe this is common sense with a little bit of education sprinkled on top, but you're like, well, that makes a hell of a lot more sense than the Kurdish oil not hitting the market, right? I mean, it's funny, isn't it? It's the cheese curds, man, the cheese curds. You're like, the Kurds, really? So think about it, though. There's somebody reporting this that has a journalism major. They learn how to write good. That's their background. And they're like, oh, by the way, you are now reporting on the oil industry. They're like, what the hell is OPEC? Yeah, money well spent. No, but here's the thing. People get their information from that. So I was trying to make this a point the other day. News is not fundamental analysis. Downloading 50 years of oil inventory data to find the average peak supply in the season, right, on the calendar year of oil, so that you know when oil prices are likely to be lowest and when oil prices are likely to be highest. And then on top of that, sprinkle on current macroeconomic conditions so that you know when to buy and know when not to buy, or know when to sell or know when not to sell. All of a sudden you're like, well, if you knew that, you could predict the future, and if you can predict the future, it'd be a lot easier. But that's what I've been trying to tell you. Well, so Malcolm says it's priceless. Well, you know what? I can put a price on it, right? So I studied the entire oil industry at Harvard University. Cost me thousands of dollars, and I read more than 2,000 pages and learned the entire 200-year history of the oil industry globally from a Russian PhD from Oxford. So it's not priceless in the sense I paid a price plus the time. By the way, I got an A+, wrote 9 papers. That's a lot in 16 weeks. So, you know, it has a cost plus, you know, everything else. But what I'm saying is, like, you want to be a professional, you want to make a lot of money, you want to be respected, right? Those are all reasonable things. I don't think anyone would look down upon you because you'd like to be respected. So shouldn't you do things like this? Right? Like, this is common sense, actually. Right? But this is what you should want. Right? Give it to me! So where do you got to go? Look, if you got to go to Harvard to get this crap, then you need to go to Harvard. Wayne, that's hard. I know it's hard. But you could also go to a community college and get this. You can get this from being here every day, right? But this is what I mean about fundamental analysis, not news. Okay? So I'm trying to motivate you to just do whatever it takes. Kick down doors, get angry, get upset, but know, right, that you can't follow other people. You can't listen to other people. You need to do the work yourself. And you need to make your own decisions. And it's that gives you power and respect. And those decisions are worth money. If you're making decisions that make money. Like, are you going to go with the premium macaroni and cheese or the regular macaroni and cheese? Like, nobody cares about that. Right? Wayne, what should I do with my $7 billion in gold? Well, you know what? I know a lot about the gold industry, the gold market and stuff. In fact, I have an outlook. Let's talk about it. There's lots of ways we can monetize this. Which one's worth more money? Right? So you got to be ready when the time comes. 240 tons is a lot of gold. So you got to be your own expert. Well, ideally, you're somebody else's expert. Unless you got $7 billion in gold, then you better understand what's going on in the gold market. You would think, right? But you'd be surprised. Most people make their money from inheritance, right? So I don't know. Do the analysis. Fall in love with doing the analysis. Fall in love with doing the work. There's no quick way. Right. Yeah. So, but anyways, we do that with money though, don't we, Ryan, in the fundamentals course? Supply and demand of money, how it affects interest rates. It's cool. Do 2 hours just on that? Yeah. Yeah. What else should we do? We're going to look at the Kiwi and then maybe wrap her up. So I've added to my position. So we'll see where she goes. Well, Robert, we had very disconcerting elections in New Zealand over the weekend. It wasn't on this time frame, John. To be honest with you, I don't remember. But you're right. It's not a good trade. You're right. I'm trying to think of it honestly, and I don't remember. It wasn't that long ago, though. A fib, not in a downtrend, no. Yeah, you're right, John. I don't remember. I'm sorry. I'm looking at it too, like, really? You know, I might have just got caught with my pants down on a trade here. I might have done this. Thinking that, right? See the pivot cluster, monthly support, weekly support. I might have drank the Kool-Aid on that one. Okay. Psych leveled as well, so I'm in a, way up there, so 20, so I don't know. You're right, it sucks. Well, if you got resistance, yeah. Yeah, so this one here is hopeful. That one's a better one. So anyways, I did miss the second buy, but it depends on the time frame you're looking at, though, Frank. Okay. Dangerous little place, huh? Dangerous little place. Yeah. So anyways, let's call it a day. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client to TradersWay. I'm assuming everybody here has at least a demo account at TradersWay, simply to show respect for the investment that they're making into you up front and the good karma that we provide every single day. Your mother would be embarrassed if you haven't opened a demo account, bare minimum. And you don't want to embarrass your mother. Anytime, Robert. I wish I had time to prepare for these things. Good thing I know it. So, hey, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Right on, Henley. I appreciate that. Thank you. Yeah. Those are my birds. Yeah. Boy, I wish I had to commute for an hour up to Atlanta, sit in a cube all day, listen to mediocre people act like they're intelligent and powerful. Yes, sir. I'm so sorry, sir. I'll work harder. Yeah. Right? Some guy that has a power trip yells at me just because I have a Harvard degree. You think you're so smart, don't you? Ivy League. Well, you're in the South now, boy, and you do what I tell you. Sorry, yes, sir. Yeah. Obama's not going to protect you here. Kathy in the popcorn. Throw it away. Yeah. Oh, I gotta go. All right, I'll see you guys tomorrow. Have a wonderful day. Cheers.